In today's video, we are talking about why is financial planning critically important for retirement? So why is financial planning critically important for retirement? And why do we need to focus on it right now? I am going to share some pretty outstanding numbers with you that is going to motivate you to focus on your financial plan so that you can retire one day. All right, part one, the importance of retirement planning. Retirement planning is critical because we need to create that foundation for a secure future. Without proper planning, you may find yourself struggling to make ends meet in retirement, and we definitely don't want that. Retirement planning includes setting up a savings plan for yourself and setting up an investment plan for yourself, determining how much money you will need in retirement, and creating that plan to manage your money during retirement so that you do not run out of money. I remember when I was trying to figure out how much I would need in order to become financially free, I kept running my numbers different ways, and I thought, okay, if I invest more in the stock market, I would need X amount. And if I was to invest even more in real estate, I would need this amount. And I just wrote everything out on my marker board. I wrote out the amounts in all of my different accounts. So I have a Roth IRA, a traditional IRA, different brokerage accounts, and then I also have real estate properties. So I wrote down the value of those real estate properties and the cash flow that I was receiving. So I knew my income, my rental income for each property, and the expenses for each property. So I deducted out those expenses so I could see the exact cash flow that I was really receiving, and not just the total revenue or the total rental income that was coming in. I deducted out my expenses. And I also took a look at my everyday expenses, just my normal expenses, so I would know exactly how much I was spending. And once I had it all written out on the marker board, after I put all of my income from my different sources and the balances in my investment accounts, all of my expenses, everything financial, I could just see it all on my marker board. And then I determined, okay, this is going to be my financial freedom number. And if you want to know how to determine that, I have a video that breaks that down even further. I'll leave a link above. You can check that out later on. But essentially, you want to take your annual expenses and multiply it by the number 25, and that is going to give you your financial freedom number. That would be the expenses you would be spending in retirement, which could be different than they are right now. So once I figured out my own financial freedom number, I had determined that if I purchased just one more property, then I would become financially free. And I ran the numbers on that property. It needed to be a 4-bedroom place. Since I rent to singles, I rent out the rooms individually. So I knew exactly how much I would need to be making, and I knew that was possible by purchasing one more 4-bedroom place. So determine what your financial freedom number would be. And comment below and tell me if you already know what your financial freedom number is. And then part two of our financial planning process and why it is critically important is starting as early as possible. One of the biggest benefits of retirement planning is starting as soon as you can. That way you can take advantage of the eighth wonder of the world, compound interest. So even if you are just starting with a very small amount in the beginning, it is going to grow exponentially because of compound interest. And I want to show you exactly what I'm talking about. So let's take a look at this graph. Let's say we are investing for 10 years and getting a 10% return on our money, which is pretty average for the US stock market, and we are contributing $1,000 a month. You can see after 10 years, we are going to have a balance of just over $231,000, which is a pretty fair amount. But let's see if we were able to do this over 30 years instead of just that 10 years. So if we are still getting that 10% rate of return and we are contributing that $1,000 every single month, then at the end of 30 years, we are going to have over $2.4 million in our investment account. You can see in this chart, all of that green is compound interest. That is money you did not contribute. You can see that blue part is the amount that you contributed, which is a lot smaller than the green part because we had that 30 years to grow our money. So you can see the earlier we start, the less we will have to contribute. But I don't want you to get discouraged if you feel like you are starting late, because as the saying goes, the best time to plant a tree was 5 years ago. The next best time is today. We know that if we would have invested 5 years ago, our money would already be growing. But the next best time to start is today, because once we do start, we can start taking advantage of compound interest. The third part that I want to talk about is the different risks that are associated with not setting up your financial plan. Not creating a financial plan for retirement can lead to a lot of challenges in the future. Without the proper planning, you may not be able to have enough money to live off of during your retirement years. And you may be hoping to rely on Social Security or on other people to fund your lifestyle, to fund just your living expenses. And this could be really hard just trying to make ends meet. And if there are unexpected expenses that come up, for example, a health expense, which is definitely not unheard of for those in their older retirement years, but if something like that happens and you don't have money to cover it, you are going to have a real financial challenge in your life. You may deplete all of your savings and the majority of your investment accounts, and that is going to leave you very vulnerable in those retirement years. And just to share a personal example, when I had my 9-to-5 job, I had a coworker and she was in her 70s and she was continuing to work because she didn't have a retirement set up. There were some unfortunate circumstances that happened in her past, but she still had to work. She could not retire in her 70s because she didn't have a retirement fund. And unfortunately, the job she was trying to perform at the company, she just wasn't able to pick up on the skills quick enough. So they ended up letting her go, and she had to find another job somewhere. So we really want to make sure that we are planning now for retirement, because we don't know what will happen in the future. Even if we're saying, oh, I love working, I'm never going to quit working, that may be your thought, but in actuality, you may not be able to keep a job or be able to find a job just because you may be lacking skills later in life. The earlier we can work on our financial planning for retirement, the better off we are going to be. Not only that, we are not going to be a burden on someone else. We aren't going to have to rely on someone else to take care of our finances for us or pay for our expenses. Wouldn't it be nice if we were so well set that we had extra to help other people out? And then part 4 of why is financial planning for retirement critically important is about diversification. Diversification is spreading our investments across different asset classes. For example, we could be investing in real estate like I like to do and the stock market, or we can do just the stock market, but not just have one single type of investment in our investment accounts. This is going to minimize our risk, especially as we are getting closer to retirement. We want to take a closer look at what we are invested in case we want to diversify even more. For example, with my real estate investments, I have more than one property that I own. And then with my stock market investments, I don't just have one single company that I own, that I have all of my money in. I have an index fund and then a few different individual stocks. So I don't just place all of my money on one single company. And if you're curious to know which index fund I like, I have another video for you. I will leave a link above. And then part 5 of our financial planning for retirement is Social Security. I want to bring this up even though it is not a guarantee. We can actually see what our estimated Social Security benefits could be on the Social Security website. So it's kind of fun to look at that and see what they could be, but I would not rely on receiving that income just in case. And then part 6 of financial planning is to review your plan over time. Retirement planning is not just a one-time single event. We want to review our plan because things can definitely change over time. Our expenses can change, our income can change, the investments can change. There are a number of different factors, and we want to keep our eye on those different factors. That way we can make adjustments as we go along. Instead of just getting to retirement and thinking, oh, I should have switched over to a little bit safer investment a couple years ago, or something like that. We want to know what our plan is and make sure we are adjusting along the way. And then part 7 of financial planning for retirement is to seek guidance if you need to. I know when I was getting started investing, I was really nervous about it and I wasn't sure how to go about investing in real estate or in the stock market. So I found a couple of different mentors and I asked them a lot of questions, and they really helped me set up a good financial plan for myself. And I continued to do research over time and get better and better at investing. So if you are looking for some guidance on retirement planning and you want some help with it, I have a free masterclass that talks about investing in the stock market and how you can work with me. And I want to share what one of my clients had said after going through the program with me. He said, it's very eye-opening because you're saying, let's look at our finances. What are we doing with them? What should we be doing with them? Because this is where we want to be. He just had an eye-opening experience that yes, we can go along in life and spend money here and there and get a raise and then buy a new boat or whatever. But he was thinking, oh, I need to make a plan. What can I do with my money right now that is going to help me to get to where I really want to be? So if you are interested in getting some help from me, some guidance, make sure and click the link below to watch the free masterclass. And if you found this video helpful, please hit that like button and share it with someone else who would like to hear this information. And hit the subscribe button to subscribe to my YouTube channel and hit the little bell to get notified on when I post new videos. And if you want to see even more amazing content from me, make sure and check out the videos on the side of the screen. Thanks so much for watching. I'll see you in the next video.